Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. We have the Dow Industrials up 207, Nasdaq's up 26, S&Ps are up 22, gold contract down $1.90, trading at $1,239 an ounce. Silver off 16 cents at $17.27 an ounce. Platinum up 12 bucks at $1,260 an ounce. Copper up a penny at $2.99 a pound. Light sweet crude flat at $82.84 a barrel. Bonds 10-year down 12 ticks at 127.21. 30-year off 18 at 142.27. King dollar up 189 ticks at 85.24. The euro is down 41 at 127. The yen is trading up 21 at 106.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? This is going to get really interesting here, folks, and this is why. So cash S&P, we're at 1883. We made it to 1898, and the bottom of the swing points from August 7th is the 1904 area to the 1960 area. Now, what's going to get really intriguing here is this. I suspect that we're going to make it up into that area. This is option expiration Friday. So the market has every right to do volume. Thus far, it hasn't done volume. We will get some volume in at the close, but thus far, you are setting up a B to a C of an ABC structure in the way down, and it's a monster. It's a 199-point A to B structure. If you go over to the SPY and look at the SPY looks like it's almost set up to C. It's a tough call. I'm making the theoretical distinction that this is not the C. The reason being is that the market should be able to bounce more than one day. That's the reality. So we've done 165 million shares. You're going into 380 million shares. You're going into another 230 million shares. The SPY more than likely can probably bounce up to at least 191. We got to 189.75 today. Dow Industrials. What do you have with the Dow Industrials? We take a look at the Dow Industrials. What you have with the Dow Industrials is this. And so what I'll do here, we're going to go through the dailies and the weeklies, folks. Dow Industrials up 226 today. We are at 16,342. We've got to 16,427. What you have here, that's the level that I expect, it wants to get into and get into a little bit higher. So that correlation, the correlation between the August swing points and the S&P and where the Dow is into those swing points. So the Dow is saying that, the Dow should be able to bounce up to 16,000, even 700, somewhere around 700. So that's another 245 points away, 345 points away. Yeah. That'd be normal. Why? Because we went from 17,350 straight down to 15,855. NASDAQ composite. We go take a look at the composite. What we have with the composite is this. Composite is up 35 bucks today. We're at 42.53, and I suspect it's going to crawl somehow up to 43.21. So that's another 75 points. The A to B in the composite is a monster also. Your A point is 46.10, and your B point is 41.16. Yeah, so 46.10. Holy cow. Yeah, I was talking 500 points. So these A to B structures, folks, are just absolute monsters. Gold contract. What do we have with gold? Gold, they try to basically Friday. Working on gold, they couldn't do it. They were trying to hammer gold down. Intraday, it just didn't, it wouldn't hold. We had a low out here today of 12.32. You're at 12.38 right now, and what gold's doing, it's not backing off where it's trying to build cause to get back inside the larger range. The larger range in gold, folks, is the 12.42 area. You back down today with 100,000 contracts going into 258,000 contracts. So the back down is saying that gold wants to get into higher price. Oil, let's go take a look at the oil market. We have what oil out here. Oil right now is flat, and oil's this is going to be wild. Oil's, you know, everyone's yapping that oil's going to bounce. It's going to bounce all right. I think it just did the bounce. Oil's going to be running down to $77, and right now we're at 82.84. The 10-year bond we have with the 10-year today has backed off 13 ticks, 1.8 million contracts, and that 1.8 million contracts, folks, is going against 4 million contracts. Bottom line, these bonds are basically building. If they're ever building another ABC structure up, it's going to be a monster, because the A point on this is 123 and your B is 130. That's insanity in the bond market, folks. But the bottom line, bonds are going higher. Yields are going lower. We take a look at the 30-year bond. We have with the 30-year. 30-year is backing down 470,000 contracts out here. That was after going topside with the 1.1 million contracts. If we do go look at the TLT, if you folks are trading the TLT out here, the equity structure, that's a classic also. What you have with this is that we're done 6.1 million shares and you're going against 37 million. That's on the daily. You take this and we put this on the weekly. What you're going to see on the weekly is that you've gone into the swing points with dramatically higher volume. On the week thus far, we've done 79 million going into a swing point that had 35 million, going into a swing point that had 19 million. Bonds want to basically get to higher price, lower yield. King Dollar. What do we have a King Dollar out here? King Dollar. She is backing off today. Whoops, no, she's going up today. King Dollar's doing a nice ABC structure on the way down. This is going to be wild watching this whole baby shake out. Why? Because what we had with King Dollar, expansion up was tremendous. We went from 79 up to 87. You back down. It's building cause right now to go break the lows that were established on Wednesday. That low is a high spike low at 84.52. I expect what we're going to see is King Dollar is going to run down to this 82.97 area. That will give the metals market more room to breathe and to get inside its higher range at the 12.42 area. 877-927-6648. Some of the high volume stocks, and thus far we have a low volume market out here. You get Facebook up 260. Let's see, Comcast is up $1. We have Halliburton up 169. In the energy sector, folks, just about every one of them are dead cat bounces. They're doing ABC structures on the way down. Real juice, though. You get Exxon up 40 cents. The Schlumberger is up 360. I think that was up $6, actually. So this is going to be a monster ABC down. Yeah, it was. So Schlumberger had traded, oh, this is going to be sick. Schlumberger had traded up to $98. Now the baby's back at 94. Netflix, NFLX. Okay, you got to love this one. This is going to be a trip watching this whole thing shake out. Netflix is at 353. Intraday today, folks, what you had is that you had Mark Cuban come out saying that he felt Netflix was undervalued. He was buying Netflix. And intraday, what that did do is you can see where the push was. The push, he tweeted that out at 11:30 this morning. Netflix went from 342 up to 350. Gets up to 359. Right now you're at 353. So check this out with Netflix, okay? So I want to walk through this because I can't wait to see how this shakes out. So Netflix is a personality stock. Netflix, my take on Netflix right now is that Netflix wants to basically trade down to $1.72. So we're at 354. It had, no doubt, it has supported 317, and it reached 331. But you came down here on a weekly. On a weekly, we've done 37 million shares. You're going into 51 million. You're going into 22 million. What I expect you're going to see it build more cars, get to lower price. Why? Because what is sticking out like a sore thumb is 172, number one. But that's Netflix also is a personality stock that loves to do that. When we get back, we're going to talk a little bit more about it because he was pumping it. There's no doubt about it, and he really doesn't even have that many shares. Dow Industrials right now up 265, Nasdaq up 42, S&Ps are up 30. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's take a look at some of the Dow stocks out here. The American Express is up 259. You get Boeing up 304. Disney's up 197, Oxy's up 204, Big Blue's up 244, Honeywell is up 421. Inside the Dow Industrials, let's see what we have. There's not one Dow stock that's not positive, folks. And what you're going to see here, which is really cool, okay, so the strongest one putting the juice, the lead to the pedal here is American Express, up 262. The weakest one is Pfizer, and that's still up 9 pennies. What you're going to see here, though, what dead cat bounces are all about. Pretty incredible. We go back to Netflix for a second. Okay, so Netflix, so Mark Cuban is out here. He's saying, first he tweets out that he had bought Netflix. And when I heard this, I'm saying, this is interesting, you know, because what you do have, folks, this is the new way to pump stocks. There's no doubt about it. You know, Carl Icahn is the master at it. You know, you basically buy a position. Well, Warren Buffett is the absolute master. I think they probably already got him. He's more subtle about it. But anyway, you know, Icahn is the one who's probably done the best at it. And it looks like Cuban wants to follow in Icahn's footsteps. So what you had here is that he tweets out that he's buying Netflix. He bought Netflix. Then he comes on the CNBC Fast Money. And his reason for buying Netflix is that he felt that it was undervalued and that someone else would come in and buy it. And, in fact, he planned on keeping it forever. That was his rap, okay? The thing that's amazing is that it's 50,000 shares. And, you know, a couple folks on there said, oh, that's big. It's not big. 50,000 shares, folks, is only $15 million, okay? Cuban, you know, has plenty of bread, so that's $7.5 million, you know, with a margin. Big deal. Bottom line, and I can't wait to see how this thing shakes out. The reason being is that Netflix is a personality stock, and a personality stock, what I've found is that their personalities don't change over the course of years. And in Netflix's position, this is what ends up happening, and it's always hard to buy it, is that Netflix loves to do corrections that are just extraordinary, like they're sick. You know, in 2011, Netflix went from 304 down to 62, then bounced to 133, so it went up another 100%, and then went back down to $53. And then what's it do? It goes from $53 straight up to $457, and then croaks down at 300. It's like, oh my God. Okay, that's 33%. We've only done 25% thus far. 33. It loves doing 33%. Some say like do 50, 60%. You know, so my take is that it's going a lot lower. I mean, not a small amount lower. So we'll see where this shakes out. And when it does go a lot lower, by the way, there's some high-volume spikes down there that'll just be dynamite to buy. And when I say dynamite to buy, when I give you the number, listen to this number. This is a sick number. Okay, so let me put this back up, because on a monthly basis, this thing is glaring. On a monthly basis, let me put it back. I'm going to put it back 10 years, actually. So a monthly basis, it's glaring that the first place is 282. 282. And more than likely, you have too much volume there. So then the next place would be 238. Big numbers. Let's go to Tim in Denver, Colorado. Hey, Tim, what's happening, man?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. It's good to talk to you.
Good to hear your voice, man.
So how's beautiful Denver?
Oh, it's beautiful today. It's the best place, you know. It's doing good.
I bet it is, man. And how is your music doing?
Wonderful.
Yeah, you playing a lot?
Never stops. Oh, yeah.
Good.
Oh, yeah.
Good.
It's my getaway, man. It's my getaway.
That's a beautiful thing. Okay, so we're going to look at NUGT, right?
Do you like the setup in that?
Boy, it's a close one. Let's take a look at it. Okay, so the nugget, folks, goes like this. The nugget is the gold miners bull, 300% bull of the New York ARCA's index, okay, which is the HUI. So when we take a look at this, let me pull this up. So let me do it this way. So I take the HUI, coming right into the, yeah, see, it was just too bad that oh, hold it. No, do I have the volume? I don't get the volume until later on this. Yeah, see, I don't get the volume on the HUI until after the close, a couple hours after the close. So we're coming into a high volume spike at 29.82 million. We go back over to the NUGT. NUGT. Okay, so we go back over here. So you're coming in with 8 million shares versus 12 thus far, which is good, but you're coming in hot. There's no doubt about that, man. Do you know what I mean? You're coming in hot. Let me do this a different way, because I can get more familiar. When you're doing these, folks, what you want to do, okay, I got to go into the HUI for a second, because what you want to do is just see the stocks, because there's a few of them that, I can't get that quick enough either. Bummer. Okay, that doesn't make any sense. I know some of them that are in it, okay? So what happens is this. Let me just see some. GG. What you want to do is go through a few of these. Okay, so if I go through Goldcorp is coming in with 6 million shares versus 10. AEM is coming in with 2.8 versus 5. That's not bad. RGLD. Now, Royal Gold looks good. This is interesting. So Royal Gold looks good. Now, what happened there is that, now there's a difference. Royal Gold really goes on the price of gold. So Royal Gold is coming out at 668 versus 1.4 FNV. Let me just see something else.
Well, it's kind of like, I kind of like to set up, but boy, it's just been getting pounded, you know. It's
Yeah. No, and FNV looks really good, Franco-Nevada. So, okay. So in the context that the two stocks that you, if you want to look at, engage where the metal price is going, folks, is Franco-Nevada, which is then FNV, and Royal Gold. Franco-Nevada is doing an ABC structure on the way up. Now, this is encouraging because, you know, it's come off the bottom of 46. You're at 53, and it's a 13.8 A to B. 52, 62, 65. This is good. So Franco-Nevada is saying that it wants to get up to and over the high of August. So that's cool, okay? So in that aspect, NUGT, let me just, NUGT. So you figured out whether to buy this thing at the close? Is that what you're doing here?
Exactly.
Yeah, I know.
This thing, Friday's is a good buy. I'm thinking, okay.
I know.
Here goes, but it's touch and go.
It is. And see what happens here, folks, is this. So watch this. We're at 20.30. So the low is 18.88, and there's no doubt that you have the. It's a high volume, but of course it can spike it. But your risk versus your reward, yeah, I'd buy it. You know why? Because your reward is $27.03. And, you know, your risk is a couple dollars, but it would have to break down and stay underneath that 1888. And I suspect what you're going to get, here, just stay there for a second. We're coming right back. This is Tom O'Brien. We get Tim from Denver. We want to hear from you folks. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials up 270, Nasdaq up 46, S&Ps are up 30. What is going to be interesting is to see what kind of juice they can put into this market at the close with option expiration. But it looks to me that we are going to have the B to C of an ABC structure on the way down. That's what I'm speculating, and is going to be with lighter volume. And that is on an option expiration, which is just brings the possibility up higher that that's exactly what we're dealing with right now. We're talking with Tim. We're talking about the NUGT. You know, risk versus reward out here, it's not bad, Tim. That's what it really comes down to.
What could you see a run going to this, Tommy? How much?
I'm sorry?
What do you think a run to this? Maybe 28, 20?
Yeah, what I did is this. I'm taking the bottom of the May level. That would be the first place that had any juice. I mean, a dead cat bounce should get you to 27.01. You know, that's how that's set up.
Yep.
You know, so what you do have, now check this out. This is what I've noticed, and this is pretty cool. So a lot of the gold stocks, folks, have been pulling back, right? And if you get the gold report, you know that this week what I was talking about is going to be heavy volatility because two different things end up happening. When you're coming off large turns in the marketplace, heavy volatility comes in the marketplace, and it goes by fits. So my take on this is that gold is coming off the bottom, and that's why the fits are happening in a big way. The S&Ps are coming off the top. Fits are going in a huge way coming off the top. They're acting correctly. The price destruction is quick, though. There's no doubt about it. We look at EGO. EGO, bottom line, on the 8th of October, it goes from 681 to 769. That's with 12 million. Well, it's backing right into that area with 6. But I like that setup. Now, I own it, but I like that setup. Okay, it's backing down. It has lighter volume. That's on the daily. We put this on the weekly. It's a higher high with volume. So if we get a higher high with volume, it wants to go higher. And it's dramatic, too. Last week we had 33 million. You reached 769. This week we had 36 million to reach 791. We take a look at Gold Corp. Same setup there. We have a Gold Corp. She's backing down with 6 million versus going topside with 10. That's on the daily. We take this on the weekly, and what you have on the weekly, she's actually just pushing into 24 with volume. So,
I was waiting for this day. I knew they'd probably bring it down today, and I thought, okay, here we go. This is going to be the try to buy it anyway. So
you know what it'd be really sweet if we had been into this B2C of the S&Ps going up the third or fourth day, Tim. That would be really sweet. You know what I mean?
Right.
Then your reward or your risk would go down dramatically. You definitely do have a risk at this point that you get a gap away on it. That's the other side of it. So it's like, let me just see something. So we're at 8.2 million. The last time intraday we had any volume was up at 2090. Right now, oh, this is pretty cool. Okay, hold on. You get 22 minutes left too. That's good. So 2005. What I would do is this. If this trades, okay, your low was at 215 at 2005, right?
At 2005, yep.
And watch what we're doing intraday right now, folks, okay? We hit that low with 290,000 on a 10-minute chart. We're coming into that low, and we're into it right now, 9 minutes, with 107 million versus 290. Yeah, I'd buy it. I'd buy it. Because with that saying, Friday is the day they have to wipe this baby out. That's what it comes down to,
yeah.
Oh, hey, listen, I gotta bring this up because one of our tigers in the den. This is great. Thanks, Mark. So what he's bringing up is this. So check this out. This is really cool, folks. Okay, you can sell a November 20 put, and this is what Mark's talking about, and there's no doubt. You are right on that, Mark. Okay, so watch how this works, folks. We bring this up. You could sell a November 20 put right now for approximately 260. You can split it. 260 is the bid, 285 is the sell right now. I mean the ask. Okay, let's say it's 272. You split it or whatever. Bottom line is that you would collect the 260. If it goes down to 20 in November, you're in it for 1740. That's another way of trading it too,
Right.
But that if you've never traded the options on these triples, folks, okay, if you trade them, guess what? Move them out immediately because, as Bob from Weston used to always say, options are like dead fish. The longer you hold them, the more they stink. Hey, cooking, brother.
Have a good one, Tommy.
Okay, man. Great hearing from you. Have a great one, man. Have a safe one. 877-927-6648. You definitely want fast fingers. But that is a great way, folks, of getting into a position. And that's really important to understand. That what that would be all about is that you're selling a put at the bottom of the range, as one of Mr. Bill says in the den. You're selling at the bottom of the range. Bottom line, you better make sure, though, when you sell puts that you want to own them. Because guess what? It can get put to you. If it gets put to you, then you do have a premium inside there of 260. So we'll see where that whole baby shakes out. The gold market in general, they couldn't smoke the gold contract today. Franco-Nevada right now is saying that the actual physical gold wants to go higher. We go look at the GLD. GLD right here. Oh, this is nice, too. The GLD setting an ABC structure on the way up. Yeah, it is. A point on the GLD is 114. Your B out here is 120. So $6. You probably hit your C. You're backing down with 5.8 million today versus going topside with 9.4. It's a nice setup. And, this is a nice setup. Dicey at bottoms and tops, folks, no doubt about it. But what happens is that when you are putting trades on at bottoms and tops, right on the other side. And don't put it 1 or 2 pennies away from the bottom or the top, by the way, it stops. You got to give it a little breathing room there because they will probe both the bottom and the top to see whether, see how many. There's always buy stops or sell stops there. Inside OA, let's go to the small caps because what you had with the small caps have led this whole thing down, and then all you heard is that, the small caps are doing so great. Meaning, and this week, and it's hilarious, folks, because, the small caps did gap up this morning and then gave it up. I suspect, this bounce is not over, by the way, okay? Small caps are still going to try to get a little bit higher, but for today, they sold it off, and they sold it off pretty quick. The IWM had gone in September, it was 117. It goes straight down to 103. You bounced up here to 109. Right now, you're at 107.69. The small caps can get into this 109 area. The XLE, if you want to see something on the weekly basis, the XLE, bottom line, you talk about not only going lower, the XLE sliced, diced, and just took apart the February 5th benchmark. This volume is extraordinary, so check this out. The February 5th benchmark, now, the XLE is down 20%, folks. 81.77 is the low of it. 84.18 was the high of it. It can't even get above the high of it after it goes down that much. And on a weekly basis, what we have is that you came down with 267 million shares versus the swing point of 98 million shares. Bottom line is that is not only an extraordinary move down, that is saying that the XLE next move down is going to bring you to 61. 61 on the XLE is going to give you a 40% correction in the XLE. It's a monster. If we go to the XLF, we take a look at the XLF. XLF, dead cat bounce out here today. Extraordinary dead cat bounce. This is so cool because the FAZ, now I haven't traded the FAZ for a while, but that FAZ is going to get some lightning going. The FAZ had run up to $20, $19.91 2 days ago. Right now it's at $18. When it ran topside with 19 million. It's pulling back with 6. We go back over to this XLF once again, and what you're going to see is this XLF is a beautiful ABC structure on the way down. It's setting up really nice. You have a high volume swing point on the way down, coming into the February downdraft. So check this out. February downdraft, the top of that is 21.31. We hit 21.55. We did that with 359 million shares versus 298. What that's saying is that the XLF is also going to be coming back down to at least test the lows of this week. So we got a couple nice setups out here. 877-927-6648. Dow Industrials up 297. Nasdaq up 53. S&P's up 35. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We go back and we take a look at the. So right now it's 748 million, and they'll throw some juice into the close because we have the option expiration at the close. But thus far, I don't think we're going to get into that 1.1, 1.2. Just doesn't seem that it's going to happen. That's on the NYSE and the NASDAQ. There's no way we're going to make it because we're at 1.9 right now. That baby would have to generate 600 million at the close. And what I'm talking about specifically, folks, is that an ABC structure on the way down, the definition of it is, number one, A to B is a straight line move. And if we take a look at the indices, you're going to see that's about as straight as you can get. We went straight down from the high that was generated on the 19th of September. That was 2019, straight down to 1820. And you came down with volume expanding all the way down. On the way back up, so the definition, you get a straight line move, which we've got. Then you're going to do the B to C, which I think we're in right now. Now, the B to C goes all over the place, okay? It's a consolidation move, jumps all over the place. That consolidation move, though, in order to stay with the definition of an ABC structure on the way down, has to have lighter volume. And it doesn't matter whether it's option expiration, doesn't matter what is in the middle of it. So what would end up happening today is that means that it would have to do lighter volume and the NYSE, then basically 1.2 billion. And on the NASDAQ's never going to make it because we did 3 billion on the NASDAQ on the way down, 2.5. We did 2.5 and 3. So that's the definition on the way back up, that you need lighter volume on the way back up. And then, of course, when you do the C to D, volume blows out of the market again, and you have to go, in order to get the full price projection, you have to get by the B point with volume. And in this particular case, this is what's going to be really wild watching this shake out, is that the 15th, which is Wednesday, we had the highest volume day we did all year. So it's going to be hard to break that down if, in fact, we don't build some cause before we come into that area. And I was talking about that on the morning show, on the Nadex platform show this morning. So I'll set the bull and bear up right now. The bear setup is that, yeah, you get up to higher price, you have lighter volume, and then what you would do, you'd basically mess around a bit. You'd build some cause before you attack that low again. So you'd probably, the consolidation go a week, 2 weeks, whatever that is. Then it would be set up that, okay, now I'm ready to make the attack downtown into the 1820 area again. We'll see whether they get the volume or not. The probability would go higher if you built cause. Now let me make the bull situation. The bull situation would be that you come down here very quickly, like next week. You come down right away. There's no way that you'd get that volume characteristic right off the bat. The probability, well, let's put it this way. The probability would be very small that you would get that. The reason being is that the amount of energy that it took, number one, to go straight down, which we did. In fact, what is it? Let's see, 5, 10, well, I guess it's a full month, 22 trading days. That's what we've done. We've gone straight down for 22 trading days. It'll be very hard to just turn immediately, get into those lower levels and blow those levels away. If that's what you get, what you will see is that means the market is much weaker than I even expect. So that can happen. There's no doubt about it. On the longer term, this is huge problems, folks. Okay, in the longer term, I can make the case. I've been making the case of the February 5th level. We're just about there. The case here is for 1340 S&P, which is insanity. I understand that, but that's how it's set up. So the next step down, and you will see whether it can hold at that level, is 1650 to 1570 S&P. That's how this is set up. And that very well can hold there. That was the lows of 2013. And see, when you look back, that's not that far long ago. It's because we just went straight up. And that, we take this and we put this on just a normal retracement basis. And this is where you absolutely want to understand what you have happen here. On a natural retracement basis, because we haven't had any retracements, a 0.382 retracement of the move from 2011 up, okay, gets you a 1670 S&P, which is just, that's a long way down, okay? That's almost a 33% correction. Well, it would be a 38% correction. That's a normal correction in a market that still wants to go higher. A 50% correction, oh, big numbers. Big numbers, folks. And what you want to do, keep your eye on the XLE. Because what the XLE has done, it's gone down, it's blown away the February 5th benchmark with extraordinary volume. It's bouncing up here today. It has light volume. That XLE is setting up a much larger ABC structure on the way down. You know, it's up 85 cents today, 35 million shares. You go downtown with 60 million shares and 69 million. It's a big number. And the A point on this is 98. Your B point is 77. So you can see you're talking about 22 points. I expect this can get up to somewhere around 88, 90, and then where we're at. We're at 68. If we go take a look at where 68 is, A to B equals C to D, 68. There she is, man. Yeah, that's where we're going. See, we're going, that's November of 2012. Let me just pull this up for a second. So that's 2 years. Yeah, and you know what that is too, folks? See, this is what's going on. Man, this is a trip. Okay, your A to B structures are also lining up for the lows that were generated in June of 2012. That's how this is lining up. You know, it's lining up that you broke the channel line at that level. Your A to B, because they're so big, are lining up that if, in fact, that's what we have, that's the price projection. And, you know, the more that numbers and sectors are lining up at that same level, the higher the probability that that exactly is where that baby wants to go down to. It's important to understand that you don't get the gas and oil sector going down 20% and the indices still are basically not in bad shape. You know, you can make the case, yeah, they broke trend lines and all this, but the bottom line is that they're still pretty close to the high. You know, with the S&P, we're looking at, what, 1882, and, well, I guess it's given back all of this year's gains. But you talk about a crawl on the way up. It crawled on the way up, and, of course, it went out the window on the way down. And that's that's just how these markets trade. You know, intraday, we were back all the way from, yeah, we were back to December of 2012. Right now, however, you're all the way back up to May of 2014. Did I say 2012? No, 2013. 2013, yeah. So, bottom line, get your stops in, keep your stops in. You're going to, you know, your advisors are going to basically tell you that, no, everything's all right, and, you know, that's just how the mantra works on a continual basis. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials are up 266. Nasdaq's up 43. S&Ps are up 30. We're going to be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. We got a quote from Duke Ellington. A believer is an optimist who thinks of tomorrow. I got our tech expert here at TFNN, Mr. David White. He's also our option expert. He had a heck of a trade out here, folks.
It's White Lightning Week, isn't it?
It's White Lightning Week, and we'll be talking about that. Market-wise, let's take a look at it out here. We had the Dow Industrials up 263. Nasdaq was up 41. S&Ps are up 27. Gold contract down $3.20, trading at $1,238 an ounce. Silver down 15 at $17.28 an ounce. Platinum up 11 at 1,000. Where is she? $2.59 an ounce. That platinum is so cheap, it's amazing. Look at that spread, folks. If you're going to buy gold or platinum, buy platinum. The spread is $30. That's insanity. Platinum is worth a lot more than gold. Copper up 2 pennies, trading at $3 a pound. Light sweet crude flat at $83.10. Bonds, we had the 10-year down 13 ticks at 127. 30-year off 17 ticks at 142.28. Both the 10-year, the 30-year, they've taken out the swings with volume. Bottom line is that they want to go dramatically higher. One of our tigers in the den are actually telling me that platinum traded below gold this week. You want to buy it hand over fist every time that happens, folks, if you like metals. King Dollar. King Dollar up 249 ticks at 85.29. King Dollar is doing ABC structure on the way down. That'll give metals relief. That's on the shorter term. On the longer term, King Dollar wants to go a lot higher. Euro down 48 at 127.61. The yen up 54 at 106.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have a B to C starting, folks, of 199-point ABC structure on the way down. That, folks, is one monster, okay? Oh, that's great. How did that work? Thanks. I don't even have my mic on. No, I actually took it off. I'm sorry, folks. This is pretty bad. Sorry about this. My God. Okay. There we go. My God. So, S&Ps, what do we have? You go up. It's option expiration, and we did go up with light volume. This is pretty amazing on option expiration. You had 1 billion shares. It's going into 1.2 billion on the NYSE and the Nasdaq. You did 2.2 going into 2.5 at 3 billion. You can take your choice. Okay, it's pretty wild, particularly because we're talking about 199.8 A to B structure. We'll see whether the S&P. What I'd definitely like to see, I'd like to see the cash get up to about 1904 to 1915, and I suspect it will crawl up there somehow. It's going to crawl up there. Dow Industrials. We take a look at the Dow. Inside the Dow Industrials out here today, you did have every Dow stock positive. Inside the Dow, you're up 263 points. The Dow is at the swing points of August. So what you're going to be able to gauge at the Dow is at what the S&P will do. The Dow, I suspect, can get up to 649. So that's another 200 points. Yeah, 200 points. 5, 6, 179 points. That's where ICE sets up. ICE sets up on the Dow at 16,649. NASDAQ Composite. What do you have with the Composite? Composite goes topside out here today. Light volume. Inside the Composite, what you have? We go up 41 bucks. We're at 42.58. Next stop is the 43.33. Composite also has a monster ABC structure on the way down. It's just about 500 points. So there's big numbers out here. Inside the gold contract, gold couldn't get croaked today. They tried to basically break it, couldn't break it. You're at 12.38. Gold is building cause, folks, to get inside that 12.42 area. It looks like we've set up small ABC structures on the way up, actually. If we go over and we take a look at the GLD, it's a nice little setup, GLD. So Franco-Nevada is also a nice little setup. GLD today pulls back with 7.8 million shares, and you're going into 9 million shares. You're going into 10.6 million shares. So I like it when it's kind of like this, because what you have had is that, gold had two signs of strength coming off that low that had been generated on October 3rd. First sign of strength was on the 8th. The second sign of strength was on the 15th. And you're backing into those with lighter volume. Bonds, the 10 and the 30-year, folks, you have higher price, monster volume. We put this on a continuous contract. What you're going to see, I'm going to just put the 30-year up here so you can see how clean this is. 30-year, the highs in the 10 and the 30 go all the way back to July of 2012. The high in the 30 is 150.311. We hit 148 this week with huge volume. You blew right through ICE, and that's what it takes, folks, to get up to higher price.
I've got something, and probably for the first 5 years that I was trading, I didn't spend a lot of time looking at bonds.
Yes.
But let's try to put what happened this week in bonds in context.
Okay.
Would you say that a one-day move of 1,000 points in the Dow, or 1,500 points in the Dow, or 500 points in the Dow, what in the scheme of things, if you went home and watched TV one night, what would be the equivalent in a Dow move that people yelled on television?
1,000.
1,000 at least.
Yeah.
Yes. Most people that don't follow bonds, this is kind of like the Super Bowl and the World Series ran into the last game of the Stanley Cup and on New Year's Eve. It's like everything in the world, right?
Just so you can get your head wrapped around this for a second, folks, okay? This is how wild this is. The 30-year bonds. Now, the 30-year I've traded a lot. You know, I don't trade the 10-year as much. And the 30-year, that was a $9,000 move with the $2,100 up. So you get, so two different things ended up happening there, folks. If you were short the 30-year, that's why you saw, there's plenty of people that were short bonds, okay? That's why you saw that explosion on the way up, because no one in the right mind can take 9 points in the bond market, you know. In the 10-year, it was the same setup, okay? Even more spectacular, because in the 10-year, you're only putting up 1,300, and in the 10-year, you had that move 3.5 points. So, well, actually, see, the 30-year was the one. The 30-year was the 30. The 10-year, too, don't get me wrong. It's just that, and so to wrap your head around that a little bit more, what is so unusual there, folks, is that when you trade in the bond market, you don't get moves like that also. Do you know what I mean? The reason you just don't. You know what I mean?
This is like 1929, the crash. I mean,
well,
levels.
It happened in 2008.
Right.
You know,
they're very few and far between.
They're few and far between. And what you have had happen is this. This is what has been so bizarre to me. Learning, you know, in the past, whether it's a couple decades. I remember do you remember, okay, in the run-up, folks, in 1996, 98, on a continual basis, and this is when I was just still really learning about bonds, okay? Big time. I'm always learning about bonds. We get a bond expert in the den who teaches us all the time. But in that time frame, I keep remembering on CNBC on a continual basis, they'd bring on every single analyst and say you can't make money in bonds. And then the part of the market I was in the bankrupt bond market. I'm saying to myself, well, these people don't even know what they're talking about, man. But I said, well, maybe in the treasuries it's different. I'm in a different part of it, right? So then I start looking at the treasuries, and I'm realizing that, what are they talking about? The bond market has been in a bull market since 1980. So in that context, it was like, wow, this is interesting. And then I realized that, oh, they're all equity people. Of course they're going to say they can't make money in bonds, because they can't make any money if people put their money in bonds. And, you know,
I just look at it statistically, and I know that if you get a Dow move of 100 points and a Dow move of 500 points, it's not 5 times the signal. It's actually 9.6 times the signal. It's logarithmic when you move back up. And I have absolutely no idea in context how to put this, but it is absolutely earth-shaking kind of move.
Oh, it is.
Yeah.
It is. It's going to be earth-shaking, man, when the bottom line, we're at 150 and 160 in the bonds, and your interest rates are 1.5%. You stay right there, folks. Dave and I are coming back.
Hey, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
Tom. What a week, man.
I know.
What a week. I'll tell you, man. Look, I know it's Tech Friday. So and I appreciate you taking my call because it's a non-tech question. But I was driving along lovely Clearwater Beach here on a beautiful day, and I just wanted to throw this into consideration. If you don't have the gold report, man, this is the time to get the gold report. Because think about this one for a minute, right? Let's go back to Wednesday. Enormous moves on the bond trades, right?
Yes.
On the bond market that you and Dave were talking about before the break, right? And then we go back and then we look at the dollar. Look at how the dollar moved down. Think about the amount of dollars that were needed to purchase treasuries and the notes of that magnitude, and yet the dollar went down. So obviously some big whales, hedge funds, banks, whoever, were selling into that demand. So you got to say to yourself, on a day like this, if the dollar doesn't go to the moon with that kind of demand for treasuries and bonds, then we have, and I agree with you, Tom, long-term wise, the dollar is going to move higher, like a lot higher over the next coming years.
Sure.
The euro's done. Let's be real about it. The euro is done. And plus, even if you didn't believe that, the quantitative easing program, that's going to devalue their currency, even if you didn't buy into the reasons I think the euro is going to go down. But the point I want to make is so you put those pieces of the puzzle together, and you got to say to yourself, the bottom is in on gold, the bottom is in on platinum, The bottom is in on silver. It's time to get the gold report, and let's just start making some money with this thing.
Yeah, too much. I love it. Hey, listen to this, folks. And Dave, this just come across the tape. Now, this is really wild, folks. Honeywell, okay? Honeywell, this is pretty wild. So I got to read you this because this just came across. Honeywell International Chief Executive Officer Dave Coate reversed his policy of avoiding currency hedges. I'm concerned the euro may sink further. The company will hedge 1/2 of its euro exposure beginning in 2015. Now, as soon as I read that, this 2015, man, they're waiting too long.
I was going to say the cow's out of the barn.
Oh, my God. So listen to this. Folks, this is so sick, it's unbelievable. 1 penny. I'm going to let you, I'm hoping, well, I want everyone watching Tiger TV, but I know you're driving, Dave. So I want you to speculate a 1 penny drop in the euro, how much they lose annual revenue. Just 1 penny.
It's enormous for a company like Honeywell.
It's a sick number. Dave, it's $45 million. I thought I was seeing things. It's $45 million per penny.
And then the next segment here, it says that basically it dropped 8 cents already.
Yeah.
So you already see $3-some-odd billion gone.
How sick is that, right?
That's crazy, man.
So listen, we got to figure this out over the weekend. When they're saying 2015, I'm saying to myself, 2015, man, hold it. You get 2 full months that you're not doing a thing. And then, you know, what my experience has been, folks, okay, is that most of the time, you know, when these large companies do hedges, they actually don't put them on correctly. I'm going to wrap my head around it because the correct delta neutral hedge, folks, has to do with whatever amount of money you're taking in Europe that you want to bring back. Let's say because he's talking the euro. Well, you make sure that that's what it is and you're not trading it. Most of the time they start trading it and then they all blow up. So it's wild, though. Isn't it wild that 1 penny is $45 million?
It gives you an idea just how enormous the hedge really is.
No, totally.
You know what I'm saying? Yeah. You know what I'm saying? I'll tell you, along the lines of the currency play, are you keeping your eye on the Nikkei?
Well, what you have with the Nikkei right now, okay, is that, you know, so we're down. Yeah, it's still monster volume, man. I mean, this thing wants to go to 13,900.
That's setting up a sweetheart buy because Abe and their equivalent of the Federal Reserve is Japan Central Bank, whatever the name escapes me at the moment. I mean, they're committed to devaluing their currency, trashing the currency. And I've noticed over the last several years, Tom, when a central bank, head of the central bank says we're going to destroy our currency, they will do it. They will do it, listen, and that is going to put fuel in the Nikkei. I
have no idea, and let me tell you something, folks. I have no idea how the Toyotas of the world even stayed in business when you look at how strong the yen got. I mean, it's just amazing. Hey, cooking, brother.
Thanks, Tom.
Thanks for the call, man. Have a great one. Have a safe one. Okay, so we got our man, Mr. Dave White. We're going to be looking at, so before the bell, well, that was today, right? Because Halliburton came out today, didn't it?
No.
No,
this
is Monday? Oh, Monday,
this is
okay.
Monday. I wanted to at least look forward a couple of days and see.
Okay.
Because we're going to have these kind of earnings every day now for the next 2 weeks.
Oh, so Monday, Apple's come out after the bell.
Right.
And
Chipotle, Illumina, IBM, and, of course, before the bell, Halliburton and Genuine Parts. Genuine Parts probably going to tell us a little bit about how the auto business is doing.
Yes.
But then, of course, we don't even go another day before the bell. We go
it's going to be a fun week.
Lexmark, Manpower, McDonald's, Coca-Cola. After the bell on Tuesday, we've got Broadcom and Cree. I could have done this for the next 2 weeks, and it would have been big-name stocks every day.
Okay.
Friday, kind of a weekday for earnings, but other than that, it's every day after the close is going to be some big moves. Every morning, we're going to probably see a big spike about 8 o'clock in the morning, one way or the other on these stocks coming out. Today, not such a bad news from, which broker was it out there today?
Morgan Stanley.
Morgan Stanley.
Yeah.
Okay. And we're going to probably, like you said, if we were looking for, if you want intraday trading, you're going to have intraday trading at least for the next 2 weeks as these Super Bowl players come out, and every one of them is going to be a Netflix or One to the Moon or a GoPro. I mean, we're going to have all these stocks, and I think especially with the action we've had, I think a lot of them are going to be wildly mispriced up and down.
They are. Oh, there's no doubt. Because what happens, folks, is that there's not that there are controls and have been controls, but there are controls and have been controls. And no one's controlling it, folks. It's just been a non-volatile market and complacency. And now what you have is that volatility, and volatility doesn't just go away.
We had the highest long margin, and we had the shortest, the least amount of shorts. Right? Now, what happens after you make some big move like this? Everybody wants to short everything. So when these things come in and they make a penny over, they're not going to be blown out to the downside probably like we've seen this week. They're probably going to run them, and then they're going to fail, right? Okay. They're going to take you to the cleaners, and then you're going to get reversals on
So if you happen to be a bull and you've never traded both sides of the market, folks, okay, this is a bear's mentality, okay? Over the weekend, everyone's going to be laying around, and the bear's mentality is that, oh, please, God, let this market go up.
Right.
It's sick. I understand that, folks, and it's not sick in the context. So you gotta shake this out too, because I was walking out of the building Wednesday, and there's another guy, and between both of us, we have no bear claws left. They grew this week, okay? But the reality, we've been looking at each other for the last year, saying, "Oh my God, I don't believe it." And I'd go up in the elevator, say, "Okay, I'm going at it again," right? And so we were talking, and we said, what's so weird? And it's not that we want the market to go down. We just analytically think that that's where it's going to go. We both said, man, now this is crazy. What are we even happy about? Because, yeah, we made money, but the reality is that we hope that the economy is going to be all right. And it is going to be all right, folks. One has nothing to do with the other. But there will be a lot of paper wealth that's lost,
Money heaven.
Yeah, Dave White, Tom O'Brien. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out there. Don't forget, folks, every trading day at TFNN, we do live content, 8 o'clock in the morning to 6 o'clock in the evening. Now, folks, you can get all that content right on your cell phone. TFNN.mobi will give you the audio. TFNN.com will give you the TV, video, and the audio right in the top right-hand corner. We're looking at the Art of Time in the Trades, and we're looking at the IWM.
And well, I wanted to bring up two things before we get into the charts. Early on, when I was listening, probably 1998, you brought up something that has stuck with me for a long time.
Okay.
There's going to be a few times every year where you can make absolutely massive money in a very short amount of time.
Right.
We were actually talking about that during the break.
That's right.
But what we were doing, we actually talked about this chart last week.
We did.
The IWM. And what I was showing was that it came into confluence about perfectly.
That's right.
What I didn't bring up at the same time, though, was that it was making a nice Gartley out of here.
Yes.
Now, it had nothing to do with, I'm thinking that our IWM goes back up to the top.
Right.
But we were in such dire circumstances on Wednesday that I was looking at the risk-reward, and it certainly wasn't to the downside.
Right.
Premiums for the VIX were through the roof. You couldn't buy anything that limited your risk at all.
Right.
But you could certainly buy calls for pennies on the dollar because no one wanted anything to it. Ebola was taking over the country. The bonds were blowing up.
Yep.
I cannot take the opposite side of when everybody says the end of the world is happening, right? Because if it does happen, then I don't need to worry about it. There's not going to be anybody on the other side of the trade to give me that money anyway, right?
Right.
But to me, it looked like there was panic, there was everything I want, and the IWM had been leading us all the way down.
Yes.
and I figured it was going to lead us on the way up. It hit within 15 cents of the confluence level, which actually we can show here this next slide.
Yeah.
It basically did a perfect Gartley butterfly for me, even though I didn't like the volume patterns.
No, I'm with you. I understand.
But all I wanted was a very short move. So in my newsletter on Wednesday, we bought the IWM 106 calls.
Right.
For 60 cents.
Okay.
And, of course, it went to, my target was 109. It went to 109, and I was hitting the button, send, to sell as quick as you could this morning on that one. But not a bad move.
Congratulations.
60 cents to $3 on the IWM on the calls.
Yes.
And this is playing the opposite side of what is, if you've never really gone through a bear market.
Right.
The wicked moves on the backside of these things can be profitable if, one, you don't want to hang around long.
That's right.
You want to leave the party about halfway through.
That's right.
In fact, we were talking about that earlier today.
Yeah, no doubt. Now check this out, folks. This is pretty cool. So, you know, we do a lot of great education at TFNN. We have a lot of great traders at TFNN, talk hosts at TFNN, and there's a huge amount of experience. And each and every one of us, there's no doubt, can teach everyone quite a bit, and we can learn a lot off all you folks also. What you're hearing here, Dave's going to crack up, because, see, I know the history inside of this also, because what you have technically the setup, and then you have the experience. And so what happens, folks, is this, is that Dave happens to know this guy, Tim Ward. I know Tim. And Tim and I, we go back a long time, and Dave goes back a long time with him, too. And Tim Ward was the master of that trade.
Yes.
You know, and it's really cool. Isn't it really cool? Because when we did this, it started with the OEX folks, and we were doing these in 1994. And I remember the first time, and I was cracking up because I saw in the den yesterday, everyone, you know, and I says, oh, man, I says, that is so cool. Because it is, right? And I'm giving you all the credit. But when you have that experience and you know that, okay, hold it, man, that's the trade. That's the trade. Because your risk is very minimal and your reward is huge. Because some of those trades, folks, inside that option market that Dave did, so picture this. The premium has exploded, but guess what? Even when they explode, that was on the put side versus the call side. So
right.
No one wanted the calls.
The way I looked at it is I had a trade with a 50% chance of success.
Yes.
Okay. But if I was right, it was going to crank out 400 or 500% on the other side, and all I had was a 50-50 chance of it losing. Those asymmetrical bets in options on expiration are no different than when you line up a regular trade and you say, hey, I want to be able to win 3 or 4 times what I want to lose. If I'm going to lose $1, I want to be able to see $4 on the opposite side. It doesn't matter if it's a one-day trade with options. You need to look at it this exact same way, because next time I'm probably going to be wrong.
No, now.
Or maybe I'm going to be wrong.
That's the first part of the trade. The second part of the trade, folks, which was the most crucial part of the trade, and this is what you absolutely want to wrap your head around, is that, guess what? Dave got out immediately at the open today, okay? And what that's all about is not being greedy.
Right.
It's huge, man. I'm just walking them through it, because you very well could have, you know, the whole world thought this morning that the small caps were going to just continue to keep going.
Well, we left a little money on the table on one of the other trades.
Yeah.
But 2 of the 3 trades we had hit my number. I wanted 109 on that, and the XIV, which was the VIX trade, we bought at 25.
Right.
I wanted 29. It hit like 29.05, and I was out. And the one that didn't perform, I sold at the same time, which was the SPYs, and I think we were in it for 75 cents and out at $2.50. So no bad trade there either, but it went to 350. But if 2 of the 3 are telling me that it's time to get out, and I saw that spike, you take your money, especially on a Friday.
You do.
And you're out.
Well, you know what's going to be intriguing here? We can look at it during the break. So the VIX, I didn't know they had the VIX also, because what happened is that on the CBOE, folks, okay, the futures on the VIX went down today.
Yeah.
For an hour and a half. So I don't know if that affected that price. But so maybe it's really good that you got out prior to that, okay?
Well, I was looking for 29. It hit 29. I took my money.
Perfect, man. Perfect.
So
that's a beautiful
that's
thing.
the one thing, is when it hits, if you start going, well, I'm going to let it run a little bit, or let it run a little bit.
Done.
If you're sitting on a 300 or 400% profit, the idea should be shoot first, ask questions later. Not
in 36 hours.
Yeah, and not hang around to the party for a long time. So you got to really know that you got to take your money. But if you want to look at a great trade from both the confluence level and putting it together with a Gartley level, and if you look at this, there were two railroad, you were talking about
the railroad tracks
earlier.
Right.
There were two railroad tracks in it. All I wanted to get up there was to 109, and it got there, and that's when I knew that anything more, maybe it's going there, maybe it's not, but I was pretty sure it was going to go to that 109 level.
Yes.
And especially as violent as the market was.
Yeah.
And those are the kind of trades, like you said, when you wake up and you go, you can't believe you were that lucky.
Yeah, you can't.
But at the same time, it was something that you acquired the knowledge to do over time.
Right.
Very hard to teach anybody that same thing. You've got to go through it a few times, which is something you've always said.
Right.
Once you go through a few market cycles and you see these things.
Right.
Now, the other thing is to be open for those. And I probably got out of my short positions maybe a day or two early.
Yeah.
But they left me open now to having a clear mind.
They do. No, they do, man.
Kind of like eating that cracker after you have the wine, so you got your palate cleansed and you're ready to go.
No, you are.
The better traders can do it instantly.
No,
but
you absolutely
I like being out of day a little bit.
And, folks, the out of time of the trade, you can come over to our website and test drive that 30 days, absolutely free. So when we're talking confluence levels, we're talking Gartleys, talking swing points, talking.
And if you're new to TFNN, we've got videos on the website.
Yes.
And you can look and understand when Tom talks about things like confluence levels or Fibonacci retracements.
Right.
We've got some very short demos, and of course he wrote the book on it, so you might as well get that too.
There you go.
Okay.
Look at this. We're looking. I know we're looking at something they're doing with a 3D printer, but this thing is huge, man.
It is. Now most 3D printers print small parts, but one of the new things that we're going to see over the next year that I've been writing about in the Tech Insider are new materials.
Okay.
Now, in the last 3 or 4 months, it's been real popular to print concrete in small buildings, and they're showing how maybe buildings and maybe people's homes will be made out of concrete, but instead of using the blocks and standing around and trying to make something block, they're going to make organic figures, not just squares, right?
Okay.
And what we're showing on the screen here is a kind of a circular thing with some little castle-like appendages on it.
Yes.
It's going to be a very organic shape because you're not stuck with just the squares that's popular down here in Florida.
Wow.
Everybody makes, right? You can make it in different shapes, curved walls, a lot of things that'll be a lot easier to do, right? So you're not going to be stuck with the square pillbox that's so common down in there.
Man, it would blow my mind if I could not only design a building, but then build it and then put it up like that.
Well, they're doing it.
I wonder if it's efficient, though. Is it?
Yes, it is.
Money-wise, yeah?
Yeah, because the machine really isn't that expensive. It's the same concrete pump that you have to pump concrete in.
Okay.
Okay. Basically it's putting the machine together, and it's no different than I saw yesterday where a guy was sitting there cleaning up the grout lines in concrete block.
Yeah.
You come by, you clean it up a little bit, and you move on.
I got to find this out. we got plenty of nice big buildings I could do this in down in Florida.
Yeah.
Dave White, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. You stay right there. We'll come right back, folks. Dave, you can test drive Dave's newsletter. Go to TFNN, newsletters. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us. And, folks, to test drive Dave's newsletter, you go to TFNN, you go to newsletters, you're going to see trading newsletters, go to Path of Least Resistance. You can test drive that 30 days absolutely free. Right now, we're looking at 3D, and that's pretty amazing, that you can build houses now, cement houses, block, well, not just block, designed houses with
organic shapes, not just squares, but round, and build them all and print a house. And we were looking at something during the break that said, print a house a day.
I know.
And there is stuff, but pretty interesting.
YouTube channel of the week.
Well, I wanted to talk a little bit about this because we heard about HBO going basically cable-less.
That's right.
And we're seeing other people come on, and of course it really whacked part of what Netflix did this week, for a variety of reasons.
Sure.
But the problem I've always had with Netflix is I thought that they didn't really account for their content up front, but also it's really not that hard to do what they do for anybody else.
Except they own the market, right.
Right.
I'm with you. Anyone can get in that, but it's like, how are you going to get in it? Because now you got to buy the content. So buying the content's expensive.
And unless you're HBO and you're making it yourself.
Right.
So, and of course, Comcast owns NBC, so they've got their content. So all
But the difference with HBO is that HBO is getting $14 per subscriber, and we only pay, what, $7.99 for Netflix.
Although on Netflix, they're going to ultra-high definition for $14 a month now in November. So you'll be able to download ultra-high definition, and that's another way that they're looking at separating themselves. I don't know how much...
man, I hope Netflix goes lower than before November, because they'll make a fortune. No, they will. That's a big upcharge, man.
That is. Okay. Anyway, we're talking about... I talk about my website of the week sometimes.
Yes.
What I really like, and it is interesting to see a lot of people investing in content, like YouTube, it was whatever you wanted to put on, and that was it. But YouTube's now trying to go and sponsor the best people that they have and getting their production values up and working very hard. Now, there were two brothers. One is rather famous for some movies right now, but they do they've been doing these things called crash courses. And one brother's a scientist, the other brother is a literary writer.
Okay.
In fact, they've been doing the crash courses for the last couple of years. The one guy, if you've heard of the movie Out in the Summer, The Fault in Our Stars, a big chick flick.
Yep.
He wrote it. His brother is a scientist, but they've been doing these things on YouTube for a long time.
Okay.
YouTube threw some money behind them, and they do a thing called the SciShow. It's one of the top-rated things that they have on YouTube right now. But now they're advertising YouTube on billboards on trucks and
what
buses.
What is the SciShow? What is a science?
It's a science episode about a individual thing that happens. Like last night was on what is actual love chemically in your body.
Okay.
Okay. And so they go through how does your body feel love, and they go through the science of it, and it's
That's pretty cool.
It's maybe 5 or 10 minutes.
Yeah.
And they explain what actually happens in your body, what hormones are produced, and what happened.
Okay.
And it may be anything from what an animal's doing to a burning hole that's been burning for 200 years over in Russia, and what happens. But it's a
real education, though.
It's real education. But they've spun off now 2 different channels. One's called SciShow Space, and it's just about what's going on in space that day. And then he's got some other channels like that that's going to happen. But we're going to see more people. I think YouTube is going more into the idea of we just can't let people run around and throw anything on. We've got to at least have some pretty top-rated content ourselves, and we're going to give them a little bit of cash. We're going to give them some help to make sure that they've got very high production values. It looks just like it came off NBC or CBS or Fox or one of those big television shows. Doesn't look cheaply done. But interesting to see both those guys do that. And check that out. It's SciShow on YouTube. I think you'll enjoy it. See that things are changing to you've got to own at least some content. Just like Netflix is trying to own their own content.
No doubt.
You can't be contentless. You will have no barriers to entry.
That's right. Tweet in high fidelity.
Twitter added the ability to tweet music to other people. And I'm not exactly sure why, but apparently it is a big deal. And why not available from your computer right now, so I won't be doing it. But if you have an Apple or Android product, you can add music or sound and send it to somebody. So if you're listening to a particular song, you can hit a button and send them the same song you're listening to. I dig this song, or you record a voice and send them that. But we've been thinking about where Twitter is going to go to find additional revenue and money.
Yes.
And it looks like it's going to be kind of trying to sell music along with some kind of music sharing service where, hey, I dig this song, and I'm going to send it to you, and maybe they're going to buy it on iTunes later. But this is the first thing that I've seen that's been out. They've had a very narrow focus up to this point. This is the first time I've seen a move anything.
People like to send people songs. I ask them, hey, listen to this song. Yeah, right, they do.
So it is kind of interesting.
So GTAT bankruptcy. Now, this is the Apple supplier that came out from nowhere, went up, and then
it was $20 and went to zero in a heartbeat, right?
Overnight,
Yeah. So what is interesting in this is they filed for bankruptcy on Tuesday. Apple did not want them to say anything about their supplier agreements. Now, the rumor is that if you let go of one of their secrets, you have to give them $50 million.
Okay.
There's also a lot of other draconian stuff that's supposed to be in there, like they make fun of all these Hollywood types for the writers. When they show up, they can only have orange M&Ms and, all the weird stuff that artists have, right? Well, apparently, all the rumors are that
I'm in the Writers Guild. You can be careful there.
There's all these things that they're going to make that are going to make Apple look not so good.
Yeah.
Now, on Tuesday, Apple lost in court to not have all this stuff come out. And that means that probably right about now, 72 hours, we're probably going to start seeing this stuff when I get home.
Well, that's good.
And digging through. So you might, if you're interested in investing one of the suppliers, you're going to get a lot more view of what the requirements are to be one and how big the fines are if you happen to mention something that they think is top secret.
Which is really cool. Because we know Apple is hardcore extraordinaire. There's no doubt.
It is.
Super high-speed Wi-Fi.
Right. We've got Google going one more step into getting into being the big Internet service provider this week. They are testing and got the FCC to let them test millimeter wave frequencies, basically capable of transmitting as much as a giant fiber cable to your neighborhood. So we're going to start seeing that, and I keep on thinking that they keep on edging to wanting to go after Comcast and Time Warner, and I'm wondering if that merger goes through if they do.
Yeah, that merger's not going to go through. Google's going to take over the world. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of and fly with it. Congratulations on that trade, Dave.
You
Beautiful
too.
Thing.
Good Apple trade.
Have a great one, folks. Have a safe one. We look forward to speaking to you right back here Monday. Go get them, folks.